Viewers, India's stock markets are having a meltdown, and some might say that the amount of meltdown in India is perhaps more exaggerated than what is happening in other countries. For instance, today the United States declared a state of emergency for the entire country, and the stock market made up all the gains, made up all the losses it incurred yesterday. So essentially, if you go back 2 days, we are where we were 2 days ago. And it is believed that with the national emergency being announced, the state or the country will have a purpose. There will be a there will be a determined effort to try and get on top of the coronavirus, and the solution to containing it is not very far away. In fact, as a precaution, I think almost all schools are closed between now and the end of the month. And it is hoped that by the time a clarity will be there, that life can go on as normal. So you will start seeing that the stock market will start, going back up again. This is in the United States. Now, the same thing when you cut to India, some of the things that are happening are very, very interesting. For example, the rupee is on its slide again. It's now at 74, and people are saying that it's going to go more. And there is a lot of hype, wanted, unwanted, whatever you want to call it, to try and force the rupee to go lower. And this is something that has been going on for not just 5, 10 years, probably even 15 years. We have to remember that 30 years ago, it was just 7 rupees to a dollar. And now in these 30 years, we have just kept on devaluing it, and now it is at 74. There's no need for it to be this bad. I can ask you one question. What is the basket of currencies? What is the formula that the finance ministry is using to compute this exchange rate? Can anyone share that? Why is it not in the public domain? Anyone should be able to figure out, this is the dollar to euro exchange rate, this is the dollar to yen rate, this is the dollar to pound rate, and therefore India's exchange rate, because these are the bigger trading partners, and it should be so much. And yet this is a shrouded in mystery. Nobody wants to say what it is. And this to me is very baffling. It should be very, very clear. And see, when something is hidden, that also means that perhaps somebody is juggling with the numbers for a certain event. For example, there has been an allegation by a whistleblower that the currency futures market in NSE is being rigged. And no action has taken place so far. In fact, even on the actions that have been taken against the National Stock Exchange have been very weak and very, very lopsided, should I say. The reason I say that is I have looked at the 3 different orders that the SEBI has handed down against NSE. First one, the collocation. Second one, the illegal data access. And third one, the dark fiber. All these things, it's very, very loose-goosey style. So it's very easy for those who have been given the fines to go on appeal against it in SAT and get a stay order. And it almost looks like it was done on purpose. And why do I say that? Let me take a look at the first one, which is the Nse Collocation. Now, there, what the SEBI member, Mahalingam, said was that collocation should have not been done. And having done that, NSE made so much money, around 788 crores or something like that. And then they said, this percentage of that income from collocation services, I am levying as fine. And because it took place over so many years, I am putting a fine of so many crores on it for a round total close to 1,000 crores. The number 1,000 crores suddenly made everybody sit up and take notice. Oh my God, NSE had done something really bad. Except if you look at all this, there was no mention about the fact that NSE hit from the average investor, shareholder, the fact that people were going to get a fast lane, which was the tick-by-tick architecture that was available only to those people who were co-located inside the Bandra Kurla complex. So if you had the money, there was a slightly high entrance fee. If you're a broker, if you had the money, you could get your location inside the NASDAQ server where the orders were being mapped, the buy and the sell. And because you are going to be there, you got a tremendous amount of leverage. So in order for people to be able to make use of that leverage, they needed some way to figure out how or what algorithm to run to maximize their returns. And for this, the second scam happened. That is, in 2009, there was a concerted attempt to take the data from NSE and use that to come up with algorithms which would then exploit this. And this has been detailed in the second investigation of SEBI done by SEBI member Mohanty about illegal data access. They established that illegal data access did take place. However, there is really no fine of any sort levied on it. In fact, the person who has been accused of managing or thinking up the whole thing, Mr. Ajay Shah, has not been charged yet. Worse, all we have today is he is named in an FIR, CBI FIR, but NIPFP, of which he is an employee, has not acted on him yet, which is really baffling. In fact, even in the case of Ashok, I'm trying to remember the last name. He was the chairman of NSE. We literally had to, push him out. And it looks like Mr. Rajesh is not also going to go leave easy. Anyway, third one. The third thing that happened was, in order for them to be absolutely sure that they would be the first to receive the orders as they were coming up, some of these brokers established what is called as a dark fiber, a special dedicated line between NSE and BSE. Therefore, that would enable them to be able to catch all the orders coming in BSE ahead of NSE. So it means whether the order came to BSE or NSE, these few brokers always got first looks. So they would be able to front run the market and make money off of that. What happened? In that case, again, the SEBI just said that so many crores was the money that was made off of this dark fiber, and a certain percentage of that is being levied. And that was levied on who? Those three brokers. And one of them, OPG, on which there is an FIR too, somehow managed to convince NSE that there was nothing wrong, and now they have also not paid. So at this, as things stand today, what is happening? Nobody has paid any money. Nobody has paid any fines. And NSE is looking to go public, which they should not, because they don't deserve to go public. That's the whole reason why they are doing all this kind of cleanup effort. And then, most importantly, OPG has been absolved of all its misdeeds by NSE. Who is NSE to say there's nothing, OPG did nothing wrong? This is all, basically getting rid of all these inconveniences, nuisances, so that you can suddenly say this is as pure as driven snow, and therefore NSE can go public. This is something that India is really needs to look out for, because it is my contention that because of this front running and co-location that is still happening even today, a lot of the people who have put their money in mutual funds are probably not realizing the fullest amount of upside that they would have got if there was no co-location, because mutual funds are the first ones that the co-located companies prey on. This is something that has already been proven in a book called Flash Boys by Michael Lewis. So you don't have to get this secondhand from me. You can read that book to find out. But the most important thing, SEBI did not levy any punitive damages in all these three cases. What are punitive damages? Normally, when a settlement is awarded, anybody who's doing anything illegal, there are two aspects to that. One is, for what you did and the illegal proceeds of the crime, you have to pay a fine. Secondly, you have to make sure that neither you nor somebody like you will ever commit this mistake again in the future. So that is called as punitive damages. Unfortunately, in this case, none of the SEBI members looked at, putting punitive damages against the culprits, and it should have been done. And normally, if you take any case in the United States, the punitive damages are close to 10 times more. In other words, punitive damages on co-location against NSE would have been 10,000 crores. And that is the kind of punishment that they deserve, because the money that has been alleged to have been siphoned off by a few is close to 50 to 75,000 crores over a period of 5 years. Now, that part, nobody is looking at it. Also, there is a CBI FIR, which nobody has seen any action coming out of it, except for the fact that the FIR has been filed. The people named in the FIR, one of the individuals has been let off by SEBI, saying that this person was not involved. We have to find out if he was not involved, then why did he get his name into the FIR in the first place? Clearly, the CBI had some information. So what is it that CBI has that SEBI doesn't have, or SEBI doesn't want to see? So this is a lot of muck going on. Why I'm saying all this is because of all these inherent contradictions that exist in India's markets. India's ups and downs are much more magnified. Not only that, it is also reflecting in the exchange rate. And unless India gets its hands around this problem, and there are people who know what exactly needs to be done. They just don't want to go and talk to them. This is a massive cover-up exercise that's going on. Unless you do that, the common man will never trust the stock market to invest his or her money. And today, whoever is investing their money, they're going to lose their shirts, because this coronavirus thing is just beginning. It's going to be another 4 to 6 weeks before we can actually get some sense of a trend emerging. The good news is that it looks like China has it under containment, because yesterday Apple opened all its 42 retail stores in China. And for an American company to go in and do that, that means there is a massive vote of confidence on part of Apple for the Chinese government. So if China's got it under control, then all we have to do is to worry about those who got contaminated, who went to various parts of the world, and how that can be limited. And let's hope that that happens. But the most important takeaway from all this is there is something rotten in the state of financial markets in India. And India, the Modi government, now it's in its 6 years, has still not really looked at it in any depth. And it's very, very unfortunate that people keep writing books. Mr. Ajay Shah just wrote a book as if he's an authority. I think these are all the things that they are trying to give it an official validation to make it look like these are the people who are the authentic guys who know what the markets do in India. Nothing can be further from the truth. India's markets are very shallow. There are only 100 or 150 stocks that get traded out of the 5,000 listed. I've said this before. So what it means is that, don't go by the news that comes in stock markets. It doesn't affect everybody. It only affects a few. But the numbers are going up because of all the mutual funds exposure. You also saw in the case of Yes Bank that State Bank of India and HDFC have a bunch of mutual funds that are also big in numbers, and they've all taken the stock of Yes Bank. So when the Yes Bank stock collapsed, their numbers in those mutual funds collapsed. So those people who are going to be invested in those mutual funds will see a much lesser dividend this quarter or this year, and be prepared for a shock. Thanks for listening, and subscribe to PGurus channel.